Is Enphase Energy a best stock to buy now? This stock has been behaving exactly the opposite of the market. It was at all-time highs in December when most stocks were hitting their bottoms. And Enphase sold off pretty hard after the last earnings. So this video is going to break it down, show you some of that information, why the stock's selling off. We're going to talk about valuation, and I'm going to share my thoughts if I think the stock is a buy now and what price targets to look at when adding Enphase stock. So let's dig in. You can see the stock is down over 35% year to date. Now, what's interesting about Enphase is we had all-time highs back in December. It was over $330 a share. Now trading at $163 a share, a huge drop. So year to date, this is down 35.55%, but it's down over 50% from its highs. So it's trading right now around a 48P ratio. Market cap is $22.43 billion. You can see the 52-week high was $339.92, so just under $340. 52-week low was recently here at $152.15. So Enphase reported earnings in late April, and you can see they beat on top and bottom lines. Q1 non-GAAP EPS $1.37, beat by 15 cents. Revenue $726.02 million. That's up 64.5% year over year, beat by 5.51 million. So of course the guidance or the outlook was a little bit light. So the stock sold off hard, over 25% in a single day. The forecast came in at $700 to $750 million, and the estimate was $765.2 million. Enphase CEO told CNBC growth in the US is at a standstill. And of course, rivals like Solar Edge and First Solar sold off with this news as well. So first, what does Enphase even do? This is really in the semiconductor family. It deals with microinverters. A microinverter converts the direct current power generated by a solar panel into grid-compatible alternating current for use or export. So why would consumers pay extra for a microinverter over a built-in central inverter in their solar system? There's lots of competition that build microinverters for solar panels. Well, in a standard solar pan inverter, if it fails, solar production stops completely. They're all connected. So here's a good infographic showing the difference between Enphase and some of its competition that does string inverters. So if one of these panels fails on the right side, they all go down. With Enphase, one can fail and the rest will still work. So you look at that and say, well, that's not that hard just to imitate. Why doesn't everybody else just do the same thing? And we'll talk about that more later, and really if Enphase has a moat or not. I'll share my thoughts. So this is what a microinverter looks like that Enphase builds. They were founded in 2006, and this stock has been a massive performer over that time. In fact, if you look at this over the past 5 years, it's up almost 3,000%. So they're headquartered in California, 1,400 installers in the Enphase installer network as of March 31st, 2023, approximately 3.3 million systems in 145 plus countries. Their 2022 revenue is $2.3 billion. Cash flow from operations, $744.8 million. Enphase has a strong management team, and you can see the difference here between Enphase on the left and traditional solar energy systems on the right. So what are the differentiators that would make Enphase different than any other company that makes microinverters? It really comes down to the stack, and they're doing a lot more than just microinverters, and we'll get to that in a second. But when you think about this, the software and the architecture, it really all works together as one stack. And this infographic helps kind of paint that picture. So you have the Enphase cloud, you got the microinverters, you've got the chargers, the controllers, the batteries, and so on. Now, what's interesting about Enphase, they're rolling out a lot of new products while the stock is selling off. And I think a lot of the reason why the stock ran so hard, when you think about the Inflation Reduction Act, that kind of gave it a pump. So obviously as an investor, you want to buy low and you want to sell high. So let's take a deeper look at this and see, is it an opportunity now or is it going to go lower? You can see world's first grid-forming microinverter, shipping to North America, Australia, France, and so on, and coming soon to the rest of Europe. So new products coming and expanding to new geographic areas. And then of course they have battery storage systems as well. So you can see their first and second generation shipping to all the countries there on the left, and on the right, they're already shipping their third gen to Australia and coming soon to North America. So it says 2x continuous and 3x peak power compared to prior generation. Grid services, so multiple battery programs across 8 different states. It leverages aggregators and or utilities. Enphase also has portable energy systems, and these are pretty slick. I could see a use for this myself. So as you start digging into Enphase, you'll see they're pretty diversified. They have several different product sets, including EV chargers. And EVs in the United States are growing at a compound annual growth rate of 40%. Of course, this this is a trend globally. Coming soon, smart IQ EV chargers for the US. Lots of new products coming down the pipeline. They also have something that's called bi-directional EV chargers. So vehicle to home and vehicle to grid. And these integrate seamlessly into Enphase home energy systems with grid-forming IQ8 microinverters. Enables homeowners to manage their solar, battery storage, and EV charging all from a single app. So again, this is a solution. It's a stack. It's creating an environment, not only for residential, but also commercial, of course. And you can see they've made lots of different acquisitions to try to improve that stack and build it. So this isn't just a semiconductor microinverter company. It's much more than that. And of course, anytime that you're doing due diligence on a company, you can go down a rabbit hole and spend a lot of time. This is just high level here today. But this is the Enphase installer platform. So again, they're building this entire ecosystem around their products. And it's increasing its share of wallet per home. You can see in 2019, $2,000, 2022 plus $12,000 potential income per home. Just a real quick snapshot. Pause your screen if you need to. Covering financial performance, and you can see some of the numbers there. In a nutshell, growth has been very strong. I showed you earlier how much the stock's run in 5 years, but we're starting to hit some headwinds. And so anytime you see something that's getting a premium valuation, when you start to see a slowdown in that growth, the stock typically sells off. But it can be an opportunity, especially if the company has lots of room to grow still, which I believe it does. If you go to their website, you can see all their different products and solutions. But what I really want to point out here, I want to reiterate this. The Enphase Energy System brings solar, batteries, and software together in one complete package. So now you can make, use, save, and sell your own power through a smart mobile app. With an Enphase system, you can not only lower your utility bills and reduce carbon footprint, but you can also keep your power flowing even when the weather takes an unexpected turn or the grid has a bad day. This is the clean energy future we've been waiting for. Now listen to this. This is impressive. In 1 hour, the sun creates enough energy to power the lives of every human for an entire year. So 1 hour, the sun, every single person on the planet, it can power their lives for a full year. So this is clean, renewable energy that never runs out. And solar is more practical than ever. So Enphase is going to give you that solar and battery power solution so you can store that energy from the sun. And one more mind-blowing stat here. In the last 60 seconds of this video, the sun created enough energy to power the state of Texas for 10 years, for an entire decade in 60 seconds. Okay, let's cover some reasons why the stock's been selling off and try to decide how long it's going to be in the penalty box. So we already talked about that weaker guidance. There's also a temporary slowdown in the United States. Management highlighted on the earnings call that demand in the US is slowing down, but they see it as a temporary dynamic. The reason for lower demand in the United States is two-pronged. So in the US, sell-through for Enphase's microinverters was 21% lower in the first quarter of 2023 than the fourth quarter of 2022. In California, the sell-through was down 9% in the first quarter of 2023. And this is a huge rabbit hole. You could spend a lot of time on this, but this also does impact the stock right now. So this NEM 2.0 and this NEM 3.0. And there's a lot of debate and controversy over if it's good or bad for Enphase longer term. But this is the main reason why the stock hasn't rebounded more, in my opinion. Enphase's installers are facing a difficult environment because of sharp rises in interest rates. You're seeing things starting to break. The interest rates went from basically zero and they've spiked, the fastest they've spiked in history. So these installers are switching from selling low APR with higher dealer fees to selling market rate loans with lower dealer fees, delayed payments from loan originators, or the reduction of M1 payments as well. So you're going through some disruption here and they're trying to figure this out. And I think this is the biggest reason why we're seeing some of that slowdown. Now, manufacturing capacity has been an issue as well. The CEO said on earnings that they didn't really see any issues with that, but the reality is that solar panels are having some production issues, so the supply isn't there, and you can't install the microinverter without the solar panel. So it's indirectly being impacted by supply chain issues. So Enphase continues to expect that the expected quarterly addition of microinverter capacity is about 10 million per quarter. That remains unchanged. U.S. manufacturing will be fully operational in 2023 and scales 4.5 million units per quarter by 2024. And we talked about their new products, and there's also a lot of opportunity to expand, not only in Europe, but other countries as well. So Europe's growing quickly, 25% here sequentially, more than tripled on a year-on-year basis. And they're shipping to France, Netherlands, Spain, Portugal. They're going to be growing this more and more. So suppliers are having hard times with higher interest rates. They're also also having a hard time getting the solar panels that are needed for the microinverters to be installed. Now, this article here from Motley Fool talks more about these NEM rules, commonly called NEM 3.0. So this went into effect recently, replacing NEM 2.0 rules that installers not only better understood, but seemed to prefer. And the impact was clear. As was explained during the company's Q1 earnings call, a rush to install new solar panels and their microinverters under the older rules translated into fewer sales of Enphase's biggest ticket electricity storing batteries. And the CEO expects the trend to continue for the next 3 or 4 months. So this stock is in the penalty box right now, and it's going to take a quarter or two to see results maybe before you see the other side. Now, generally as a long-term investor, you want to accumulate. If you have conviction, you understand what's going on, and you know there's going to be light at the other side of the tunnel, right? So this could be an opportunity to add shares and to accumulate shares while it's going through this rough patch. So after that 3 to 4 months, the CEO sees NEM 3.0 as a net positive and expects strong demand to resume for solar plus storage. He also notes many solar power system installers are now backlogged with 3 to 4 months of work. So this could be a temporary slowdown, and you could see a big ramp up on the other side, similar to what we're seeing in SaaS, software as a service, which bodes well for revenue growth again beginning the second half of this year. So end of 2023 and then going in 2024, you could see a huge ramp up and the stock could be a lot higher. So Enphase is trading right now at $163.08. We already talked about the range in the 52-week high and low, 152 to 339. The PE ratio right now is a 48.36. Short interest, 5.66%. And Enphase has some impressive growth numbers. Look at the EPS growth projected this quarter versus same quarter prior year, 175%. You got 192% here. Very strong numbers across the board here. Revenue growth over 5 years, 52.12%. Cash flow growth, 65.53%. Here's some of the profit margins, return on equity, some strong numbers here as well. You can see gross margin, most recent quarter, 47.24%. Return on equity, TTM, 68.95%. So valuation sitting around $22 billion market cap. This is an 8.52 price to sales. It's got an expensive price to book at 23.12, but the PE, this year's estimate is a 29.3. Next year, 22.5. This is some pretty impressive growth that we've seen with this company in the past, and I think it's going to continue again in the future, and the stock's really not trading at that much of a premium at this point. So next, let's look at a chart. Is it a buy here or not? Is it going to go lower? Let's take a look. Before I do that, I need to announce this video is sponsored by the Motley Fool. If you'd like to see the 10 best stocks to buy now, visit fool.com/firedupwealth. A reminder, they don't tell me what to make, what to tell you guys, what videos to cover, what stocks to cover. They're a great partner, and check those guys out. You can also join our private community, Patreon and Discord, where we've been absolutely crushing it with our price targets and buys since 2022. Check us out at patreon.com/firedupwealth. And do me a favor, if you're new here, subscribe to the channel and click that bell to get notifications. I'm trying to get this channel to over 40,000 subscribers in 2023. You can help me out today by subscribing. And if this video is useful, please hit the like button and drop a comment. I really need your help for the algorithm. It's been struggling as of late. I appreciate it. So every single Wednesday, we do chart day in Discord, Patreon. You can join us again, patreon.com/firedupwealth. Anytime you see orange, that's a previous chart day. Yellow is today's chart day. I've got nothing in yellow because I'm just going to tell you what I think. Now, it hasn't changed a whole lot since last time. I prefer it 155 or less DCA. It'd even be better $150 or less. Now, it didn't get below $150, but it did get to our first target below 155. It got down to $152.15. You can see it bounce and then it kind of pulled back from there. Now, we had a chart day in December where a member picked Enphase and the stock was $340. And I said I would be waiting for $200 or less. And a lot of people laughed at me and said that's probably not going to happen. Well, not only did it get below $200, it got to $152. So is this stock a buy longer term? I think under $200 DCA, that longer term, you're probably going to be happy with this stock. So is it a buy at $163? I think the answer is yes, but I'm not a financial advisor and I can't tell you what to do with your money. Of course, the stock can always go lower. If you look at these Fibonacci's, this S3 is all the way down here, and I don't think that's going to happen necessarily. But when you look at the Fibonacci retracement, a lot of times the buy area is in this red and you're trying to trim it up here in this blue if you're trading. Now, we're generally buying for 5+ year holdings for Fired Up Wealth, long-term investing. In my opinion, this is a great area to DCA. It's not going to necessarily bounce overnight, but right now it's forming a base, and I think you could see it up in that 175+ range. It's probably going to stay muted for a little while, maybe under $200. $200. You get one or two good earnings, and this thing's going to be well over $200 a share again, in my opinion. Of course, do what's best for you and your money. I hope this was helpful. Make sure you like, comment, subscribe. Have a great rest of your day. Take care.